The journey of ENRich has truly been exciting, enriching, and inspiring at every step. And we are proud to be the flag bearer of this unique, collaborative, innovative conclave. Over the past decade, ENRich has evolved into India's premier platform for energy and natural resources. The conclave brings together policymakers, CXOs, regulators, and opinion makers like yourselves to come and gain and share insights. And I would like to stress that the solutions and suggestions emerging from these discussions are shared with policymakers and sector professionals after each conclave. This year's theme is Navigating Energy Transition. After all, modernizing India's energy sector will go a long way in meeting the requirements of a vibrant and responsible economy. On this note, may I now welcome Arun Kumar, Chairman and CEO, KPMG India, Anish Day, Sector Leader, Energy and Natural Resources, Regina Mayer, Global Sector Leader, on the stage, please. Over to you, Arun. May I now invite you to deliver the welcome address.
Okay, good morning, everyone. All right. Well, on behalf of my partners and colleagues in KPMG India, delighted to welcome you to the 10th edition of ENRich, KPMG India's annual energy conclave. Many of you have been at ENRich through these years, and we're thankful for your sustained support. We will be honored today to have Sri Dharmendra Pradhan, Honorable Minister for Petroleum and Gas, and also the Minister of Steel for the ministerial session. Minister Pradhan's presence at this event over the last 5 years speaks to the importance he assigns to fresh thinking and knowledge in resolving some of India's biggest challenges, energy transition being among the foremost. The contours of India's energy strategy are being shaped by 4 cardinal compulsions: the need to provide appropriate and affordable access to energy for all, the imperative to fuel the engines of production, economic progress and growth, to ensure the country's long-term energy security, and the compelling need to reduce both India's carbon footprint from energy use as well as unsustainable resource consumption. Energy will play a critical role in supporting, or if not dealt with correctly, hindering the growth of India's economy. India's energy strategies in the coming years will have significant global implications as the country becomes the world's 3rd largest energy consumer, following the US and China. India is also one of the fastest growing energy markets in the world, accounting for more than a quarter of global energy demand growth. It has been estimated that India will account for more than 10% of the global demand for primary energy by the year 2040. Accordingly, India's energy policies will have global repercussions. In addition to economic, trade, and geopolitical compulsions, the global carbon emission mitigation impact of India's transition to renewable energy will be meaningful. India's energy sector of the future will therefore be noticeably different from what we see today. There is a need for new technology, business models, and policies that are specifically tailored to India. There is also a need for regulatory frameworks to deal with institutional changes and the creation of new infrastructure. We need to ensure energy justice for all, given that the national per capita consumption of energy is still only around 1/3 of the global average. India's energy policies in recent years have seen striking success in enhancing the levels of energy access through schemes like Saubhagya, which provided electricity connections to all, and Ujjwala, which provided LPG connections to women from underprivileged families. India has also taken on what has been acclaimed as one of the most ambitious energy transition targets of all time, 175 gigawatts of renewable energy generation by 2022. Prime Minister Modi announced an even more ambitious goal of 450 gigawatts of renewable energy generation by 2030 when he spoke at the recently concluded United Nations Climate Action Summit in New York. An enduring benefit will naturally be on pollution mitigation, the dire need for which is all too apparent in Delhi these days. On the positive side today, India is now looking set to overachieve its Paris climate change target. The most immediately visible benefit is cost, particularly on account of the recent breakthroughs in solar power generation. India has witnessed the largest decline in the cost of solar PV generation worldwide, with a cost drop of 80% between the years 2010 to 2018. So, today, India is well on the road to attaining true grid parity, even after factoring in the cost of energy transmission and storage, which is a necessary consequence of the intermittency factor associated with solar and wind generation. A beneficial consequence is the democratization of energy generation. Renewable energy generation technologies are now viable with smaller levels of investment, as seen in the rising popularity of distributed rooftop solar generation and self-contained small energy ecosystems. An example of the latter is a striking success story of the Cochin International Airport, which has the distinction of being the first fully solar-powered airport in the world. Despite these advances, India's energy transition policies have to confront challenges on many fronts, ranging from ensuring policy stability and contractual sanctity for investors in renewable power, providing a plug-and-play ecosystem for renewable energy investors, especially in terms of land requirements for PV generation and wind energy, attaining self-sufficiency in terms of battery storage, early completion and necessary augmentation of the ambitious Green Energy Corridor project, as well as restoring the financial health of state discoms. In the past 2 years, there's also been a welcome change in policy approaches towards cleaner consumption of energy, especially with the incentives and support being provided both by the union government and many state governments for a shift in urban mobility towards an autonomous, connected, electric, and shared paradigm, the ACES paradigm. This is also a key theme of today's event. The importance and urgency of these measures cannot be overemphasized, given the public health impacts of declining air quality in India's cities. So to sum up, the way that India manages its energy ecosystem will be a vital factor that contributes to the security of the country and the well-being and prosperity of its citizens, not to speak of its global contribution to mitigating the increasingly visible and worrisome impacts of climate change. With the increasing digitization of energy generation, distribution, and use, as well as the deployment of AI and big data, and resilience against cyber threats, technology will have to become an integral part of all energy strategy. I'm very pleased to announce the launch of the ENR Cyber Forum at this event today. KPMG, with its vibrant global energy practice, led by my friend Regina Mayer, who's here with us today, who's our global head of energy, as well as our experienced energy teams in India, are privileged to partner with key ministries in the center, as well as many states, in managing some of the energy challenges, such as power sector reform, supporting power operations, and enhancing efficiencies in utilities and oil companies. We are very proud that ENRich is today regarded as a flagship event in India's calendar, and an event that is not to be missed for energy practitioners. For this, I must applaud Anish Dey, our ENR leader here in India, and a team of many, and I will name a few: Puneet Narang, Preeta Sanyal, Amit Dey, Ruchika Chawla, Vivek Rahim, Nikhil Moge, Angita, and Samarth, and of course Vandana Chopra, who just spoke. I also want to especially welcome Arun Mahajan, who's sitting right up here, who conceived this event over 10 years ago. So truly the father of the ENRich event. So thank you, Arun, for being here. I want to share with you, Regina just told me that she had a choice of being in Paris today for some similar conference and Delhi, and which would she choose? And I think as luck would have it, we actually have a very lovely day in Delhi today. Yeah. So to conclude, let me say that the energy landscape of the future comes with challenges and rewards. Most of all, the rewards of energy access for all Indians and increased productivity in the economy. This 10th edition of our Energy Conclave intends to address all these and more. Thank you for being with us.
Thank you, Arun. So energy does continue to play a very critical role in the growth of India's manufacturing economy. On this note, may I now invite Anish Dey, partner and leader, Energy and Natural Resources for KPMG in India, to come and give his welcome presentation.
Thank you, Vandana. I'm going to speak from here. I'm going to walk around in front of you, just like I did last year. And it's an incredible honor to be here on this podium on the 10th anniversary of ENRich. It's been a long journey. It's also very momentous that on very similar themes, we are having a conference in Paris starting up a few hours from now and here today, which also shows the nature, global nature of some of the issues that we are addressing in the sector. So what we are going to do is just look at that. But before going over there, I wanted to take you through the journey over the 10 years, a glimpse of those 10 years. Could we have the video up, please?
ENRich actually started originally as a knowledge-sharing platform for KPMG's energy practitioners from India as well as globally. Over the years, it has evolved into a think tank for policymakers, financiers, as well as energy professionals like you to debate on issues which are relevant to the energy sector.
What we've tried to do over the years is that throughout the day, whatever various stakeholders are discussing, identify over a day-long deliberation that these are the 5 or 6 key issues that as an industry think tank we would like to take it to the government and the policymakers to get a resolution over these issues.
ENRich 2017 हम सबको देश की एनर्जी ऐसे की सेक्टर में निरंतर आपकी एनरिचमेंट सबको एक नया दिशा से जोड़ने की ये प्रयास है। India is expected to grow at the 7.3% in 2018.
Our consumption is growing fast and is going to continue to grow fast for the next 10, 15 years.
Great.
Per capita consumption if we see and the kind of growth that we are aiming at.
As a country, I think we are doing commendably in EV.
Yes, so over the 10 years, it's been a fantastic journey. I'm, again, honored to have both our predecessors, my predecessors, leaders of energy and natural resources in the room, Arun Mahajan and Manish Agarwal, and you'll hear them in the course of the day, actually in the first plenary session, when both of them will be talking about investments in the sector. The world in this 10 years has changed very substantially. And I want to take you through that change globally and in the context of the globe in India. Indulge me for a little bit. What I'm going to start with is equating the pies, the global pie and the Indian pie in terms of size, so that you can make sense of the transition which has happened in this country. In 2008, the world was at about 11,700 million tons oil equivalent. India was just 4% of that. It was very coal heavy, more than 50% was coal. Globally, it was a third of coal, a third of oil, a third of others. So that's how the global pie was. India, as I mentioned, was more than 50% coal. Fast forward into 2018, India became 6% of global energy consumption. And in a 10-year period, that growth is quite substantial. It became even more coal heavy. As you can see, that segment of the pie has become even larger. But something else has happened over there, both globally and in India. The green sliver, which if you go back in that slide, it wasn't there, it wasn't noticeable at all, has become larger. That's the renewables piece. So by 2018, renewables had started showing up both globally and in India in a fairly substantial measure. Let's go forward and take a look at 2040. And for that, I rely on the Outlook, BP World Energy Outlook, just to present that scenario before you. As you can see, both globally and in India, the share of renewables in the base case of the World Energy Outlook is substantial. But if you look at India, the big difference between India and the globe is that India continues to be very coal heavy. About 48% in this scenario is from coal. And that, of course, is a big issue, a big concern in today's world because of the highest levels of consciousness around carbon. And yesterday, we had a series of roundtables where we were discussing the investment climate. One of the sessions was on the investment climate. What came out as a consensus view, including from the private sector and the public sector, is that we can't finance greenfield coal anymore. And there was not a single dissenting voice. This was all CEOs sitting in the room. And there was not a single voice which said otherwise. Maybe the public sector can do some brownfield expansion, but the private sector just cannot find the next dollar for making investments in coal-fired power plants. In fact, one of the CEOs very clearly said out that it would be unethical to do that because it would be against the shareholders' interests in the longer term. So the potential scenario which we are looking at in India is a much larger contribution of renewables in place of coal by 2040. And the good news is that we can do that because we have one of the largest integrated grids, frequency integrated grids in the world. So we have colleagues from POSOCO who are sitting over here, Mr. Baba is sitting over here, colleagues from Power Grid sitting over here. They know the story that we can integrate a lot more renewables with the size of the grid that we have. Throw in storage into that story, it actually becomes very, very possible. And this is where I think it's a big transition from not just 3 years back, but even from a year back to where I am standing today is a big transition. It wasn't the story a year back. I could not have said that a year back. I wouldn't have expected the private sector and the public sector to say what they said yesterday. And this is actually kind of a wake-up call even for me, who otherwise theoretically could have believed it, but yesterday this is where the rubber hit the road. We know where the money is going. If at all it has to go into renewables or clean energy forms. Whether we'll find the money is also a question, and I'll come back to that question in due course. So it's a transition. We are in the thick of a transition, but that transition has just begun. There are many stories in this transition. Let's start with the story of electrification. Of course, electrification has different connotations. In the context of India, we have the whole electrification around Saubhagya scheme, which has happened in the last 3 years, which as somebody from Prayas, one of the colleagues from Prayas, the energy research think tank, he said yesterday, that it's changed the discourse in this country. So Saubhagya, getting energy access, getting clean access have been some amazing success stories in the last 3 years. But if you look at it, expand to a global scale and see what's been happening globally, between 1995 and 2017, the world grew in terms of energy requirement by about 5 billion tons of oil equivalent. Half of it went to power, and most of that what went to power actually came from the developing countries, largely India and China. Going forward, the scale of expansion between now or 2017 and 2040 is largely similar, a little lesser. There's a big energy efficiency story hidden in that. That's the reason it's a little lesser. But most of it is going towards power. That's a prognosis, that's a forecast, that most of it is going to be in power, and most of that is going to be from non-OECD countries, which means countries, especially in countries like India, which are expected to consume a lot more energy in the coming years, as you saw in that pie chart, 2040 pie chart, that's going to come over here. So we are at a place where an electrification story is unfolding globally, and that story is unfolding over here in a big measure. But there's another story, the renewable story, which I talked about earlier. We'll just go into a little more on the numbers. So this chart shows how fuel shares have changed in the power sector, or for power globally, over the years. The top chart is for coal, it's falling. The next one is for hydro and nuclear. It's also falling in a relative sense, and it's forecast to fall. And the next one is for gas, which has been rising a little bit, but it's expected to stabilize. This is, again, the base case scenarios of the BP World Energy Outlook. We are using it only for reference, but what is shown to be clear, even in the base case, is that globally, renewables will cross coal in terms of energy contribution by 2040, not capacity, not megawatts, by energy contribution by 2040. And if we go back to the story where we are saying countries like India are going to be much more renewable heavy and can be much more renewable heavy, then that curve can be steeper. In fact, as Spencer Dale, BP's chief economist, keeps telling about it, renewables has had the fastest growth for any source of energy, commercial energy, in the history of energy. So in a 10-year period, going up to 10% of the share is very, very quick. So in fact, you'll hear Jennifer talking about it. Things crawl, and then they suddenly take off. And when they take off, there's very little stopping. And what is happening over there is that both these stories are feeding into each other. The electrification story is feeding into the renewable story, and the renewable story is feeding into the electrification story. But there are many more stories over there. So let's talk about those stories as well. We talk about the story around the climate, around local environment, around consciousness. The picture on the top left, if you see, is the cover from The Economist about 4 issues ago. Many of you would have seen it. It essentially maps the temperature patterns over this period, which is about a 100-year period, 120-year period. And you see all the red bars are concentrated to the right, which means the hotter years are all concentrated towards where we stand today. And it is an irrefutable truth by now that the world is getting hotter, irrespective of the politics in your country, Regina. So, and Jennifer. The consequence of that is also shown in the graph on the right-hand side. A lot more climate incidents, Irma, Harvey, Katrina, Fani, Philin, and a lot of that is not insurable. So this is a real net loss to people, to economies, and most importantly to people on the margins. So you must understand that climate creates winners and losers, or everybody's a loser, but there are some who are greater losers than others. And then we have the local environment, not just the global one. left-hand side, you see the pollution chart in Delhi climbing over the years. Last week, it fell off the charts. In fact, what we had was a spate of people who wanted to attend but were advised not to attend this event in Delhi. I'm glad that you have still turned up in such large numbers. We also had people who moved away from Delhi in this period because they were advised not to be in Delhi. And I hope that we act on it. But it's not just a story about Delhi. If you see the India map on the right-hand side, there are these critically polluted areas which are largely coal-fired power generation belts or large industrial belts like Vapi, Ankleshwar. And we must do something about those as well. Those are critically polluted areas which we must deal with. And it brings back to the point that it's not just about carbon, but about the quality of life we live over here because of local environment, and not just here, but across the country. And finally, it's also not just finally, it's another story of consciousness. Consciousness is changing, preferences are changing. We're going to talk during the day about the effects of mobility, electric mobility, and whether we do have the resources for that or not. But in terms of preference, it's very clear that shared mobility is going up. It's gone up in the last 3 to 4 years. It's going to go up in the next 3 to 4 years for sure. Because consciousness is changing, preferences are changing. And I'm going to read that out, what you see on the screen. A car was a status symbol when I started my career, but my son is more comfortable with Ola and Uber. That's not the surprise part. The surprise part is the name over there. One of the richest men in the country saying that, Uday Kotak. There are more stories unfolding there. Stories of technology, stories of storage supporting the mainline technologies, stories of the circular economy, which we'll talk about in the course of the day. Let's look at the first story of the core technologies, renewable energy generation. Offshore wind. 5 years back was just a story on paper. Today, the last auction in the UK came at $39 per megawatt hour, which is about 3.40 rupees per kilowatt hour. Offshore wind, 45% to 50% PLF, very dependable, much more dependable than onshore wind at prices which are lower than coal. In 5 years, it's come down. In fact, the costs of wind power have come down 70% in the last decade. But it's not just a story of wind. If you look at the story of hydrogen, which is again going fast down the cost curve, there are enormous amount of possibilities. Last month, the first shipment of hydrogen in the form of ammonia went from Australia to Japan. And we're going to see more of that because there are fundamental efficiencies if you use hydrogen through fuel cells. And the issue is not of this versus that technology. This is of this and that technology. Let's dig deeper. Storage. Before we go to storage, let's look at the duck curve. The duck curve is the famous duck curve. This is a room full of energy professionals. I don't want to go deep into that explanation, except saying that the more solar you have, the more your afternoon net load falls down and the valley becomes deep. But that creates a virtuous cycle for battery storage or all other forms of storage. And that's where we are seeing the cost curves come down so sharply. Lithium-ion is not new. Battery storage is not new. But when we are applying it at scale, that is what is new. And finally, it comes to the circular economy. I'm going to spare that for the session with Jennifer and Dr. Kumar, who are going to be here and talking about it. But I summarize by saying what is written on the right-hand side. It's about more energy, less resources. How do we achieve it? It's not more energy, more resources. More energy, less resources. So it's an endless set of possibilities that we have seen, even as we go into this thing saying that, how do we cope with this? The possibilities are all there. The question is of navigating the transition. That's a task at hand. And the implications for India are many. Some of them are obvious ones. Some of them are less obvious ones or less talked about, but we need to start talking about those. If the oil economy stagnates in the Western world, is there implications for India? Remittances from the Middle East could potentially fall. So it's not just about our oil story, which can continue to grow for the next 2 decades, and that's what we say, that we have a longer runway in India as compared to the rest of the world. But if that is the global story, then the story around remittances for India is going to get affected. And while at one level we have the aggregate story, but at another level it's about individual people, about families. We all know that in states like Kerala, there's large dependence on overseas income and remittances. And that's one of the most prosperous states in the country. These kinds of structural adjustments are not easy. So from a government standpoint, one needs to be prepared for that eventuality, even if we believe that India's oil story is continuing to grow at least for the next couple of decades. But oil as a proportion coming down is almost inevitable. And with that falling, at least in proportion, the oil taxes from oil will fall. And that's something the government needs to be ready for, because taxing electricity is a much more difficult task than taxing oil at the pump. And that's why we are going to rely on utilities as well as distributed generation for supplying the electricity. But there's a story again over here. We, in this country in particular, but maybe even in California, people will say that they live under the tyranny of the grid, right? So this is the news, that customers will start ruling. The more you treat them badly, the more they will go away. And this has not been possible. This had not been possible a decade back today. It's very much possible with the fall in solar prices and the fall in storage. So the tariff structures in electricity will need to be unwound. Now compare China and India. China industrial tariffs are among the lowest. India, it is the highest. What it has done over the years is created a very competitive manufacturing economy in China, where we have killed our competitive economy here from a manufacturing standpoint. We can talk about Make in India. It won't happen till you get the input side right for that. And this is something which will have to happen. We don't have a choice. We also don't have a choice but to go for research and manufacturing, research plus manufacturing. It's not just about research, it's not about manufacturing. If the two don't come together, this is not going to happen. We've seen it happen in China, where China has taken massive strides in wind and solar and artificial intelligence, where they're not only doing cutting-edge research, but putting it into applications at scale. And that's something with similar populations. If we miss the bus this time, we are going to be in real challenge. Yesterday, in one of the sessions when we were talking about ROI from digital in the roundtables, short format roundtables, one of the gentlemen commented that we missed gunpowder, and see where we are. Before gunpowder was used in the Western world by the British, India was 25% of world's economy. Today, we are on the margins. We are nowhere in this size, close to that size. So somewhere we have to get back and get to this revolution of catching the clean tech revolution through research and manufacturing. And finally, the risks to investments have to come down. We are just about 2 steps away from falling off from the cliff, and we are in a fog. This was the conclusion drawn yesterday at the CEO's roundtable, which we had, where we were talking about the investment climate. And it's not just about power. It's across the sectors. We need to cut down red tape, cut down distortions, and improve the risk environment in this country to make all of this happen. All of these, in some form or fashion, we will have to take back to the policymakers as a group, as you, us. And as ENRich and as KPMG, we are more than keen and eager to be a partner for you in that journey. But if we do all of these right, the possibilities are just immense. We are a very, very young nation. We are a very competent nation as well. And we are a nation with inherent enterprise. Sometime in the course of the day, I would advocate that you go upstairs and look at the digital lounge which has been set up. It has 3 sections: an immersive experience zone, a technology zone. But the zone which is closest to my heart over there is the startup zone. And we have many unicorns in the making in such zones. Let me talk about that a little bit more. We ran a process for selecting startups for being in the startup zone because we know that the minister and the government wants to promote startups. We also feel as an organization we need to do our bit. Whom did we run the process for? We ran it for the startups supported by the energy companies, oil, power companies. We had 15 entries. There are many more, but we had 15 entries. We selected 7, whom you will be able to see upstairs. But the story is not about the 7. The story was equally about the 8 who are not there, but were very, very competent. We just had in that room space for 7. That story is about people who are not in that 15, but outside. But if we bring them into our thought processes, into our actions, magic can happen. So it's all about managing this transition. Resource transitions, technology transitions, going on to policy transitions, which we must enable as a community to make that happen. And this is where I'm going to stop with that thought for you, but with one additional thought, that what we do in India is not in isolation. There are things happening across the world which we need to maintain in our consciousness. What happens in the rest of the world affects us in India, and what we do in India, given the size of the economy and the population, affects the rest of the world. So what's happening in the rest of the world? For that, I'm going to call upon our Global Head of Energy and Natural Resources, Regina Mayer. She is one of the most popular figures in the US energy circles. I was in June in Houston, and Rex Tillerson was speaking, and she was speaking to Rex Tillerson in a very similar format, in a very similar forum. I found it kind of amazing. I can't go on trying to make an introduction of her, but I'll let her make her own introduction through this video. But before the video comes on, I must tell you about one thing I've learned about her. During her holidays, she goes to refineries for enjoying the holidays. That's her level of commitment. Can we have Regina, please?
Joining us now with an exclusive look at the report, KPMG Global Head of Energy and Natural Resources, Regina Mayer.
We're right in that sweet spot that OPEC wants to maintain in the 70s for Brent.
Clearly, U.S. CEOs are quite bullish because of the activity in the Permian.
Permania is alive and well, and I think it's here to stay.
What about demand?
We're still expecting demand to increase, although it's increasing more slowly than was originally projected.
I caught up with Regina Mayer, who's Global Head Energy and Natural Resources at KPMG.
My strong recommendation is that a country like India has to figure out what's the overall portfolio. The industry has been at the forefront of automating.
There's a big difference between what Wall Street views for the oil price
premium
and
acreage, organic growth, agile capital planning. That told me that there's got to be consolidation for this industry to be successful.
Well, we've seen 2 completely different situations with Hurricane Harvey and Hurricane Irma. For Irma, there's almost no refinery production that's at risk in the path of destruction.
If you were sitting down with the Saudi oil minister, what would you be telling him about shale today?
So I would tell OPEC they really need to radically rethink their strategy.
I do think OPEC's going to take decisive action today because they don't want to lose their relevance in the market, and they don't want to see the slide that we had in 2014, 2015.
So it's just a coincidence that you're in Houston. That's not why you're talking about this.
I'm a fossil fuel friendly kind of gal from Houston, Texas. What can I say?
Regina, welcome again. Let me hand this over to you.
Thank you very much. Yes, I need the clicker.
Yes.
What a privilege, what an absolute privilege to be here. Thank you so much for having me. And of course, I chose being in Delhi versus Paris because this is the heart of the industry and where it's going to grow. And as ENRich pointed out, I am literally a complete dork when it comes to the industry and my passion for it. And I want to be where things are happening and to be able to experience that firsthand. After I leave here, in fact, this weekend, I'm headed to Abu Dhabi to participate in the ADIPEC conference and sort of see the oil and gas industry from that part of the world. And I do call myself a fossil fuel friendly kind of gal from Houston, Texas, but I would say, ENRich, I'm not one of those Americans that's a climate denier. And I think for sure we have a situation where the climate is changing. We see it ourselves. I get those hurricanes that come right through my neighborhood. And we have to, as an industry and as a society, figure out how we're going to deal with that. But let me share with you just some of the disruptions that are affecting the industry and some of the things that I hear when I travel around the world and talk to different executives from different companies. Let me see if I can make this work. Which way? The big button. So let's just look at oil price. And I do have the side benefit of oil price moves around so much, I get the chance to talk about it a fair bit on television. But on November 6th, last year at this date, Brent crude was $71 per barrel. That was, in December, it plummeted to $50 per barrel. We had unexpected waivers to Iranian sanctions, and we had surging US oil output. That is a whopping 42% off of Brent's high of 82 earlier in the year. Whoops, I went the wrong way. Sorry about that. I got my bouncing red ball. Stay with me. We then soared back up to $75 per barrel. We had sabotage on tankers and a pipeline attack with a drone. The market pretty quickly shrugged that off, and we saw prices shrink down to $62 per barrel. And then again in August, I keep doing that, sorry. And then again in August, down to $45 per barrel. Excuse me, $55 per barrel. The market is shrugging off the supply side risk, and is frankly, I think, overly optimistic or pessimistic about the demand side risk and worried about slowing demand in China affecting the overall price. September, we had the prices go up 12% in one day to $68 per barrel after the attack on the Saudi Arabian oil production facilities. That took fully 5% of global oil production offline in one attack. Ho-hum, we're back down in October, and we continue to see prices slip into the low 50s. What does this really mean for you and the industry and how we manage ourselves? I think this is a very, very challenging environment where supply side and demand side expectations are not being really recognized by Wall Street. And it's a very challenging environment to be a producer in this world. Now, perhaps for India and the economy here, it's not a bad thing because you're a very large exporter, but I do think that this seesawing effect that we're witnessing is having a big impact, in particular on US shale providers that are swing producers. We're seeing a lot of pressure on the shale producers, and they're not able to drill as much as they were, and frankly, financing and capital is drying up. So it's one component of what's happening. Another component is what's happening in all the different countries. I think part of the reason why I wanted to come to Delhi too is just to get out of the US and all of the impeachment talks. It's very chaotic all over the world. You've got all the challenges of Brexit. Is it on? Is it off? Theresa May had to leave. Boris Johnson's come in. He's negotiated a stay until January of 2020, but they're going to have an election in December. And the last time they had an election in December in Britain was in 1923. So we're seeing very unprecedented activities. Israel is struggling. Netanyahu did not win a decisive victory, trying to come up with a collaboration government, very challenged there. In the US, and I will dwell on the US just for a little bit, in addition to the impeachment inquiries, we have an election coming up. We're already in an election cycle. We've had fully 30 different departures from the Trump administration cabinet. And when we started the election process, we had 24 candidates put their names in the ring. 22 of those were Democrats. I think we're probably down to about a dozen now, but the chaos and the noise is quite substantial. You have challenges in Germany. Angela Merkel, who's been leading the largest European economy for 14 years, has announced that she's stepping down after 2021. And what happens to that economy as we continue to see things move forward there? And Brazil, they were just invited to join OPEC. Fascinating move, I think, and one that further strengthens OPEC's hand in this very volatile crude price environment. So we've got this return to nationalism and populism that's driving a lot of uncertainty. And then take the trade war that's come into play, sort of a crisis of our own making, but with the tariff uncertainty and the escalations, we've had a lot of the economic benefit that came from the US tax cut erode out of the global economy. There's $110 billion worth of US goods that the Chinese have put tariffs on, and there's $375 billion of Chinese goods. For our oil and gas clients and our global energy clients, that level of uncertainty makes it incredibly difficult to manage supply chains and manage budgets and environments. And no discussion of disruption would be complete if we didn't talk about technology. And I think ENRich did a great job of talking about technology and how important it is, and they have created an incredible digital lounge upstairs that I do hope you will go and see. But let me just give you a few stats that I find to be some of the most surprising ones. Today, there are 17 billion connected devices, moving to 27 billion connected devices by 2021, a compound annual growth rate of 25%. Americans, okay, I woke up, I'm here. Everyone will be connecting with devices 4,800 times a day by 2025. Now, I know that could differ based on where in the world you are, but on average, that's what we'll see, that we're increasingly connected to our devices. And that doesn't mean just everyone that's been looking at their phone every few minutes while we're sitting here, since we're all so attached to it. And those devices are generating data, just masses and masses and masses of data. We're expected to generate 175 zettabytes of data by 2025. What's a zettabyte, you may ask? It's 1 trillion gigabytes. Look at your phone, 126 gig perhaps? 175 trillion gigabytes. And imagine, how do we manage that? How do we secure that? How do we make sense of that? That's one of our challenges. KPMG did a global survey, and we asked a bunch of CEOs, what are you most concerned about? Agility is the single currency for success in business today. Resoundingly, that was viewed as the single most important thing to be worried about. But 94% were confident globally. 94% were confident globally in their own company's ability to grow. I find that staggering in this world. But 65% were confident about the global economy growing. So there's a cognitive dissonance in those two numbers. So I'm confident that I'm gonna grow, but I don't know about the rest of y'all. And I'll pull my Texan talk out. You know, what's the plural of y'all? It's all y'all, so. So 94% are confident about their own company's ability to grow, but 65% confident about the global economy, and that is 500 basis points lower than last year. So we're increasingly getting very nervous, and you can see that with all the things that I just talked about. But here's the other very surprising and stark finding. The #1 risk to growth that all CEOs said was top of mind, or the most CEOs said was top of mind, was climate change and environmental risk. There's a first time it was #1. It vaulted from #4 to #1, beat out cyber, geopolitics, all kinds of other risks. So back to what ENRich was saying about the climate changing and us needing to take responsibility and play a leading role in our industry is absolutely key. Some of the other key findings from the survey: 80% of our energy CEOs, so now I'm taking a cut down to energy, 80% of our energy CEOs say that they're personally leading the technology strategy for their organization. What I like to say is you don't have a digital strategy, you have a business strategy that is enabled by technology, and that is the core of how we're all going to compete and be successful. 92% expect a significant return on investment within 3 years for their company's digital transformations. So I guess it's useful that we had a roundtable yesterday to talk about ROI, but we're very bullish about the ROI that we will get on our digital programs. And 66% believe that this will be accretive to jobs, not take away jobs. I know there's a lot of concern in the system about what happens to people's livelihoods, but frankly, humans need to be human, and the machines need to do a lot of the things like taking care of the 175 zettabytes worth of data that we're going to have. So finally, let me just close on how do successful energy companies navigate in this transition? And while I did characterize myself as fossil fuel friendly, I am passionate about the need for renewables and the need to decarbonize. I also believe that we can't demonize one source of fuel versus the other, and I think it needs to be an all of the above strategy, and we should focus on low carbon alternatives that have energy density and provide power to the people. Well, we have to, as an industry, focus on value. I think for too long we've been focused on production growth, reserves replacement, and our clients, our investors, our communities, our employees, our customers are demanding socially responsible value creation. We're seeing that our clients are high grading their portfolios. So I do talk a lot about the Permian, but you know, the Permian's a very different place today than it was just a few years ago. It's dominated by the IOCs now. And getting premium acreage and not just drilling to drill, because we do realize that we are not going to extract all the hydrocarbons that are in the ground today before we finish and find what the next revolution is going to be. We have to take more discipline around our investment decisions and being able to make those choices about offshore wind or decarbonizing our footprint, solar generation, and be able to put those side by side with a ultra deep water investment in the Gulf of Mexico and be able to decide how we deploy our capital effectively. Automation and digital will be the key to success. I'm a firm believer in that, and many of the use cases that are coming up, generally speaking, I find my clients in Houston are not early adopters, but in this case, they are all in, and many of them are well, you've seen Total and Equinor, just as an example, Total recently making a very big announcement about the investments that they're making in digital. And we have to figure out how to decarbonize everything we do. So what does this mean for India, right? You are one of the fastest growing, if not the fastest growing market. You've got a lot of attention from the Western world and the oil companies that want, and power companies and renewable companies that want to come in here and develop that infrastructure and help. But you have an opportunity to leapfrog. You have an opportunity to change what you're doing in terms of your fossil fuel dependence. Go with the newer types of fuel sources and reduce that dependence on foreign imported oil. And then you have the opportunity to continue to grow and continue to provide opportunity for your people. And it's really exciting to be here because you're at the heart of where the industry is going, and I'm very excited to see where you'll take it. And I look forward to just discussing further with you the challenges and opportunities that we all face together. Thank you.
So Regina, thank you for that. I think it did give us the global view of things. Arun, any comments on what we heard?
I thought we listened to two very good presentations. Anish, I really liked your presentation. Folks in Regina, you just did a great job of giving us a big picture. And I think this obviously is very key to India's growth, both in terms of It's fueling growth, but also doing it in a responsible, sustainable way.
I have a few questions for you, Regina, and this audience can get to me very easily. They can't get to you very easily, so we'll allow a little time for the audience also to ask you a few questions. But let me just ask mine first. Bob Dudley, I was listening to him in Aberdeen a couple of years back, and he was mentioning that our industry has been slow to adopt digital. Does that remain the truth still in these 2 years?
I personally don't believe that is true at all. And I think as an industry, we beat ourselves up quite a lot. But we're one of the tech-savvy industries in the world. How else could you drill a well hundreds, thousands of feet under the ocean and then thousands of feet under rock and maneuver it horizontally or this way and that and find a pocket of crude oil? All of the things that we've done with refineries, with platforms, with autonomous activities, I think we beat ourselves up way too much. When it comes to the IT technologies, I'm seeing very, very, very large-scale early adoption, particularly around drone, artificial intelligence, big data, machine learning, and then the use of assisted devices that has more information so that you can walk up to a piece of equipment and you can call up the original equipment specifications, work order history, et cetera, et cetera. Do we have a lot further to go? Absolutely. But I don't see anyone shying away from it. Frankly, I'm very optimistic and I see a lot of embracing of the technology.
Okay, that's refreshing to hear, and because it came from him, but I think you speak with a lot of logic there. I have the other question on cyber. As Arun mentioned, we are going to launch, we are going to launch the Cyber Forum for Energy and Natural Resources in India. And one of the reasons is that, as you say, we are technology heavy as an industry one way or the other. Irrespective of whether it's oil and gas or power, it's fairly technology heavy. And yet our protections don't seem to be quite there. Our nuclear plant was attacked, one of the nuclear plants was attacked about a week back. And we thought, even before that, we had thought that it was an opportune time to get the industry together and on the cyber issues. How's the US industry in this?
I had not heard about the nuclear. That's really scary. So in the US, the US has been under attack. A lot of the large oil companies that I work with, they've been under attack by state-sponsored threats for over a decade. And we've been working with some of them, and it was so stark that you could really see shift change when the sysadmin logins changed. And so you could only barely stay one step ahead. What the state-sponsored actors were looking for was intelligence instead of trying to disrupt operations. What the industry is very worried about now is how do you prevent disrupted operations? And there are small vulnerabilities, but I think for the most part, the industry is working together, particularly the grid, right? There was a book that was written that said somebody could take down the US grid, and I don't want to challenge any smart hackers out there, and I'm knocking on wood, but the industry does not believe that they have that level of vulnerability such that a single threat could come in and take down the whole US grid. But it's something that we work on over and over and over again, and we're constantly hardening and making more resilient. It's a very big threat, and the industry is spending a lot of money to protect against it.
Yeah.
So I have a question for you and maybe to Manish as well, which are the investment activities of major energy players. So Aramco getting ready. So what are you seeing in the world? And Manish, maybe you might supplement that with what you're seeing as well.
So the investor community, if I just look in the U.S. For my first response, they're not really interested in oil and gas, and they're shying away from that sector. In particular, the growth investors are gone. So it's yield and dividend, and the shale players are struggling. So I don't know that you'll see U.S. production continue to grow in the way that we've seen it grow in the past. What I would say about the Aramco investment is it's a race to monetize an asset that you know is going to lose value, is inherently losing value. So how do we monetize those assets while we can, while they're still worth something, so that we can plow that investment back into other sectors? That's my view.
So, Arun, I mean, if I look at from an India context, I think, I mean, our energy sector is a quite sort of a disaggregated sort of a sub-segments. And if you really look at, let's say, with all the story around the renewables, for example, and the challenges that we will talk about as we go around, if you see the large utilities like Statkrafts of the world, Iberdrolas of the world, Tenagas of the world, we have not seen them investing very heavily so far. Even the SoftBank, for example, which announced to capture almost like a 20% market share, have not done that over the last 4-5 years due to the challenges here rather than their appetite not to invest in. If you look at the refinery capacity, for example, and Aramco is the biggest one that we are talking about on a multiple sort of a level, and I think there the entire e-mobility part comes into play, that how the players are witnessing, especially in the context of India, and there I believe there's a good amount of investment appetite that we are sitting on. If you really look at the gas side of a play, like a city gas distribution is one which has attracted a lot of investor appetite. And then again, there's a stress side, which is for all the financial investors and the yield kind of players as well. So I think overall investment segments I would divide between strategics and the financials. I think at this point in time, we have seen more of a financials rather than a strategic utilities, because they are a long-term player and they want a policy and the regulatory certainty to really fall in place before they start investing the big dollars in.
So I have a follow-on for Manish. So we have a target of 450 gigawatts by 2030, and we are at 75 gigawatts, 80 gigawatts. So it's a big jump from here. But we see very few players. 5 years back, we saw lots of players coming in, but today it's almost very few players. So have we consolidated too quickly?
I mean, Anish, my view is a little divergent here. I think what we see is a manifestation of how this entire transition and the narrative was played out. What Regina said is something that I echo it very well, and I've been saying that every fuel type has to have a place. You cannot get one fuel type to compete with others, and that's how India built a narrative, which is like no fossil fuel, no thermal, and it is only renewables. In fact, in the slide that you presented, even in 2040, you know, while you're talking of renewables about 30-35%, the 60% is still a coal fossil fuel dominated. So I think the transition and the disruption that we wanted to shift suddenly to renewable, the ecosystem to build around that enabler was not that we worked upon. And that's what you see, what is reflective of, that the large utilities have still stayed back. I remember 2 years back, I was in Korea and was talking to SK Group, which contributes roughly about 17% to their GDP, one of the largest renewable segment. And the CEO said that while your capacity target is huge, but what I'm really looking at is what is the entry barrier? What are the ecosystem on the payment side, for example, that India has done? What is the stability of a regulatory environment for me to really come in? So that's what you see, that why there are large utilities state put. There's a consolidation happening, but there's a slowdown that you're seeing as well.
Well, I just build off of what Manish was saying too. You know, in the US, we've had this debate about nuclear assets, and there's been a big push to prematurely retire baseload power generation. And we have been successful with the states starting to value carbon-free power generation and understanding the ecosystem, because you already have all that transmission and distribution infrastructure built off of those very large reactors, and provided that the reactors are still operationally functional, and you give them a carbon credit for it, they become very, very important sources of generation. And that's where it goes to. You have to come up with an all-of-the-above strategy and look at the economics as you drive toward, ultimately, a reduced carbon footprint. That should be the focus and the goal, the outcome, not the process.
A couple of questions from the floor before we close the session. Now it's an early start to the day, but thank you. I think this was very engaging. We continue to spot trends in the sector. We will continue to make the efforts, as Manish said, that everything has to coexist, which I equally believe in. And we should not, play favorites over there. We should see what fits where. And that trend spotting comes through various kinds of thought leadership publications we bring out. That publication brings out that thought process over there. One of the thoughts which clearly are coming out is that we are moving towards a stronger electric future, and I brought out some of the implications for policy in my presentation. A little more detailed discourse on that is available in the thought leadership, which I would want the KPMG leadership to release. So may I now also call upon Nitin Adrole and Arjun Vaidyanathan on the stage for releasing that thought leadership paper called The Electric Future.
So, ladies and gentlemen, that brings us to the end of the opening session. May we also request all delegates to download the KPMG ENRich app. The QR code is at the back of your event name badge. And we have several polls running throughout the day, and your participation is key in all of them. If you need any support with the application, please connect with the registration desk. So that brings us really to the end of the opening session. Please do join us for a 20-minute coffee break before we come back here again to the main plenary to hear the Honorable Chief Minister, Dharmendra Pradhan, Minister for Petroleum and Natural Gas and Steel. We will see you back here at 11:20. Please be on time. Thank you.